Something that your lenders do not want you to know about. What is that? Well, those are assumed loans. I'm not sure how many have you have heard of them, but I put out a video in my social media the other day, and I got a lot of questions behind it. So it seems like a lot of people are not familiar with them, even agents. So therefore, in this video, we're gonna go through a bit of assumed loans and how it can benefit you as a buyer, you as a seller, and even you that are watching that are agents out there. We received a lot of calls even from agents that did not know what it was. So what is an assumed loan, just to put it in perspective? Well, real simple. You're taking over somebody else's loan. That's all it is. So what's the benefit of it? That instead of having that 7 close to 8% of today's rate, you get yesterday's rate of a 3%, 3.5, even as low as a 2.7 I've seen. And it's really beneficial, especially in today's date. So I'm gonna go through the pros and cons of an assumed loan, and then I'm gonna go over the questions that were sent out to me. But I believe the pros and cons will answer pretty much all the questions that were asked. But let me go. Do I start with the pros or do I start with the cons? Well, let me go ahead and start with the pros, right? Everything good. As we mentioned, the first thing is that you get the lower interest rates. Instead of today's interest rate, you get an assumed rate of whatever the seller is currently has a loan for. For example, I had a buyer that was looking for a home in a specific area here in Houston, Texas area, and the houses are quite expensive in this area. They have gone up. They make a pretty good amount of money, good credit, but it's just the interest rates were a bit tapped too high for them to actually get into the house in the area that they want. So I was like, well, let's ask around who has an assumption loan. Let me know which is the house that you prefer to see, that you like a lot, and then from there we can go from there and figure it out. Well, it shows out that on that particular house that they like, ask the agent, hey, do you have an assumption loan? Does your client have access to do an assumption loan? The client was a little bit versed, but she was not quite fully versed. So we worked through it together, and we were able to get that person into that particular house that they wanted. And it was a win-win on both cases. The client was looking for more money to put more down on a conventional loan that they were buying, and my client was looking for to stay in the neighborhood, of course, bigger the price, and actually lowered. It was actually a lowered payment, monthly payment for her as well. So it was a win-win. And so yeah, so that's definitely a benefit, right? Then, so what does that lead me to? That leads me that if you're a buyer, you can buy more house, and if you're a seller, you can get more for your house, especially in today's rates. So something to actually think about, right? What else? You have lower closing costs because you're assuming a loan. There's no appraisal fee. More than likely, you're gonna have to go with that financial institution. Well, not more than likely. The way it works is that you have to go through the financial institution the buyer that has the assumable loan currently has, be able to qualify with that particular financial institution. Then after that, then you can go ahead and start the process. So there's no closing costs, no broker fees. That's why the lenders don't like telling you about it. I remember the first time that I had well, I asked one of my lenders, and I was like, hey, so and so, do you think that we can do an assumption? And they try to drive me away from it. They're like, no, 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 no. You don't want to do an assumption. It takes a while. You don't want to do it. And it could take a while. It could take 45 to 60 business days, right? But that's why you have to plan accordingly. And that's in extreme measures, man. If you have a good scenario where your client is good credit, good everything, it won't take that long. But they try to discourage you. So that's why I started with something that lenders do not want you to know about. So yes, lower closing cost, no appraisal fee. So you don't have to worry about if it's going to appraise or not, because the loan's already there. And like I mentioned before, more buying power, especially if you want to stay in a specific area. That's definitely a way to look at. What's the unfortunate things, right? The cons behind it, right? Well, the cons behind it is that you have a higher down payment. How can I explain this one? Let's see. Well, if I'm just gonna take let's just say cars didn't depreciate like we all know they do. Let's say they did not depreciate and they actually appreciated. And for example, I have a BMW. I handed it over to a friend of mine, and then I just told him, hey, just take over the payments and give me what I already paid for. So if I've already paid 2 years worth of notes, just give me that. So that's pretty much how the down payment has to meet the requirements, in addition to whatever price the client is selling it. So for example, if I tell them, hey, well, take over the payment, I give you the same rate, because also cars had at a lower rate a few years ago, and give me what I paid for and give me $10,000 more. So we have to add whatever the client had already paid and whatever amount that they want additionally, or they're selling it for. So that's the one of the downfalls there, that if you don't have too much collateral to work it out, you might be limited on a assumable loan for you. Credit requirements, we just mentioned that. The credit requirements are very strict. Is the guideline, whatever financial institution there is. Sometimes they require more than others, and people kind of like they get frustrated with the process, and they don't like to continue. So one of the things that it does limit you from seeking other financial institutions other than just that particular lender. So who can assume the loan, or what kind of loan can be assumed? An FHA loan and a VA loan. On a disadvantage for you that are VAs is that if you can assume a VA loan even though you're not a veteran, because that's what veteran VA loans are. The unfortunate thing for, let's say, the seller, if they want to go ahead and use their VA privileges for another house, they won't be able to do it because they just assume that loan to somebody else. So assume the rights. Unless you have a significant other, your partner, that they have another VA, then that'll be a great benefit, which I mentioned that because that is what has happened in the past. So yeah. And another unfortunate thing is that you may be carrying a PMI for the entire length of that loan. And it's a disadvantage for those that don't like PMI, because PMI can be from from $100 to $200, even $300. Well, for those who do not know what PMI, which I will explain in a different episode, is mortgage insurance. That does not benefit you at all. It benefits the lender. So I personally don't like any PMI. So those are things you can't really shop for, right? So the credit, you don't have many choices. You then have to make sure that if you are the seller, that you have another assumable loan if you want to try to sell your house for more money, and then the mortgage insurance that you will always have if you are the buyer buying into the loan. Okay, so now I'm gonna go into some of the questions that some that I can remember and some that I just jotted down. So I'm looking for them. And I remember one of the questions was how come my real estate agent didn't mention this to me? I'm like, wow. I have to say, it has, whenever you meet your agent, there has to be open-ended questions that involve. And a lot of times agents are not finance people. They just got their license. Therefore, they may not know a lot of financing. So that's really a discovering phase. And again, for the lender, he's not gonna want to tell you about assumed loans because he's gonna miss out on that commissions. So I would say just get a more experienced agent or call me. There's a lot of newbies around there, so therefore, they might not be well versed on that. It's a real. I wouldn't say it's not known, but maybe it's a lot of work for them, or they don't want to do it. Because I was doing the research on it before I started talking about this, and 23% of the loans are out there are assumable loans. So that means that people are assuming loans. So it's out there. So why your real estate agent didn't know? I'm not sure. It's they don't explain that in real estate classes. That's the only thing that I can confirm. I am very fortunate and blessed. That's why he's God in real estate. God has given me the wisdom, one, and two, provided those resources. I come from the financial institutions. I worked for a major bank for over 10 years. So you run into this kind of lingo, which to a normal Joe that's just coming out, getting the license, it might not be as common as it will be for me. So another question is, does the loan assumption hurt my credit? Ooh, okay. So that's almost contradicting, because it's a yes, I would say, because I would say it's contradicting because the bank does a very thorough job before they allow anybody to assume the loan. But if the buyer defaults on the loan, depending on the bank guidelines, it could hurt the seller's credit. But you have to read the guidelines. Every financial institution is different. I've seen some that would say, hey, after you get a certain percent, we won't hold you liable, or as many years. But then there's been some that for the lifespan of the loan, you're liable with that person. So you're pretty much marrying a person. So yeah, I mean, there we go. That's your answer. Would that help my debt to ratio income? Most definitely. That's why you'll be able to buy more house. You'll be able to buy more house because it's a lower interest rate to your debt to ratio income. Your monthly payment is gonna be lower, so therefore it's good. So you definitely want to look into it, right? And I got this question. Somebody called me up and they mentioned, "Oh, Louis, but come on, if somebody is wanting to, who's gonna want to sell?" That was a question. Sorry. who's gonna want to sell their house with that rate? Like, why would they even want to do that? And you know what? You can get into a whole argument on that, and why would people do it? I would say get your mindset out of that, because there's always something going on in people's life. That's why before, as we touched on the question, that does it affect your credit? It could. And yes, even though they do a good due diligence, the bank does, you may run that credit of them not being able to pay their mortgage. So you never know, life happens. And so with that person who asked me, hey, why would somebody want to get rid of their house at a 3.3%? And because that's another downfall, right? So if I'm the seller and I'm looking to sell my house, and if I want to go get another house, that means I have to pay today's rate. So that's very unfortunate for me, right? Now I have to figure where I'm gonna live. But for example, there's people relocating. There's people moving out for jobs. There's athletes out there that are here temporary. There's people here with contracts for work for a certain period of time, that they were here during the COVID times. Therefore, their contract expired. They want to go home. They want to get out of here. And sometimes it's the best option, and they know that later on in life, there a lot of times when somebody's assuming or giving you an assumable loan, they're doing better in one time, or by the whole opposite, they're doing really bad. They're like, get me out of this thing, and I just want to go. So we've seen tragedies happen, unfortunately, distress times where somebody's family member passed away. I know it's not very pleasant, but it's true, and it's somebody's opportunity. It could be your opportunity that you're like, oh my God, I want to get in that area, and then so these people just want to get out. They want to get more for their buck. They just went through a hardship, and they're like, hey, get me out of here. And so yeah, you take advantage of that opportunity, and it doesn't affect you as a buyer if their credit is ruined on their side, or they do anything that they weren't supposed to once you assume the loan. Really, as a buyer, you have the edge on it, because if you default, then it could affect the seller's credit, but it can't affect your credit. So just to think about it. So if you're in the market to sell your house, that's another strategy that you can use. You can go ahead and provide an assumable loan. There's ways as agents to look at our platform and be able to look for assumable loans only. So I just gotta fly. So therefore, it's a tool for any of the sellers, especially nowadays. There's a lot of people in your area that want to be in your area, that you'd be surprised that they want to get in your area. But so yeah, let me see if there's any other questions, because I believe I answered pretty much all the questions. If you run into more questions, please write it in the comments, subscribe, hit me up. I'll be more than happy to answer those questions. I love helping people out. There's a lot of knowledge out there. Assumable loans is a very basic thing, but there's also a lot of loans out there. I do have my Series 6, 7, but I'm not a loan officer. So I'm just financially, I have some financial wisdom, I would say, in some areas, just because I've been in the financial world for very, very long times. So I know the instruments that we can use in real estate. Okay. So therefore, let's see, any other questions that I did not answer? What credit score do I have to have? That all depends, again, with the criteria in every financial institute. I've seen a 580 and I've seen a 700 requirement. So really is the financial institute that person has. So I think I will leave it there. Just know pros in assuming a loan: lower interest rate, lower closing costs, no appraisal fee, and most important, buying power. And if you're a seller, it gives you more money for your house. Therefore, use that as a tool. Okay. And if they ask you, where did you learn that? Tell them, got in real estate with Big Lou. You guys have a wonderful day. And if you have any questions, feel free to shoot me out. Also follow me on IG, Big Lou Real Estate. And shoot me a DM, question, anything. I'm here to help. Subscribe.